Hello and welcome. You're listening to the Lighthouse Canton Insights podcast. This series is brought to you by Lighthouse Canton, a global investment institution that provides wealth and asset management services to accredited investors. Here on this podcast, we'll look to shine a light on the market developments and share strategic insights to help you navigate the global investment landscape. In each episode, we'll be bringing you conversations from leading experts in various fields, including Lighthouse Canton's own investment team and specialists. This podcast was recorded on 14th March 2023 and was prepared based on the information available as of the date of recording. Please stay tuned for the important information at the end of this episode.
Hello and welcome again to the Lighthouse Canton Insights podcast. In this episode, we'll focus on private market investments and take a closer look at India's vibrant startup ecosystem. In 2021, reports showed that private markets fundraising rose by 20% to $1.2 trillion. This rate has held steady with $639 billion raised globally in the first half of 2022. And yet, despite the current macroeconomic condition, organizations and agencies are forecasting that AUM in private markets will grow by at least $7 to $8 trillion by 2027. Now, if we look at the geographies where this capital is allocated to, we'll see that just over half of that AUM resides in North American investments, with Europe coming in at 21% and Asia at 22%. Just 5 years ago, Asia's AUM was only 60% of Europe's, and it has caught up significantly, and we believe that this trend will continue. We're seeing promising growth indicators across Asia, favorable demographic trends, high internet penetration, and a burgeoning internet economy, as well as strong government support across the region. India, in particular, has captured the attention of many institutional and private capital investors. In 2021, we saw it rise to become the third largest startup ecosystem globally, behind the US and China. In recent years, India's startup ecosystem has witnessed a boom. Over $20 billion was invested into the country in 2021, which was about 5% of global venture capital deal flows. And at the end of 2022, there were 1,205 unicorns globally, with nearly 10% of them hailing from India. So today, we have with us ex-Norwest Ventures and VC veteran Sohil Chand of Nueva Investment Partners, as well as Sanket Sinha, Global Head of Asset Management at Lighthouse Canton, to share more on India's venture landscape. Welcome, Sohil and Sanket. How are both of you today? And thank you for coming on today's show.
Hi, Samantha. Thanks a lot for having us.
Thanks for having us. Pleasure to be here.
Now, great to have you both here. So, before we begin, do you want to give us a bit of your background about yourself, what you do? Sohil, we understand that you're a bit of a veteran in India's VC landscape. You used to be head of Norwest Venture Partners in India, and you were previously at Goldman Sachs, where you practically built the India PE business.
Yes, that's right. So I've been investing in India's private equity and venture ecosystem for almost 20 years now. As you mentioned, first at Goldman Sachs and then at Norwest, where I ran the India business for them. So I've seen and invested in many startups across the cycle, from really early stage businesses that we started, to even later stage and listed companies. With the LC Nueva Fund, which I set up along with Lighthouse Canton, what we're doing there is focusing on really early stage businesses, so pre-series A's and some select series A kind of businesses, and giving them the capital they need in order to grow significantly. So our thesis is about just picking really good teams which have demonstrated that they have a viable business plan, achieved some revenues, built a product, and they need money to scale that product and get to a institutional venture capital or private equity round, and we make that bet in them. Our typical check size is about $1 million, and the fund is about a $45 million fund. We're targeting to do about 30 investments, a little over 30 investments in the fund. So I'll stop there, Samantha. Maybe let Sanket introduce himself and then we can talk more.
Thank you, Sohil. Hi, everyone. As far as my background is concerned, I started with Edelweiss Capital in India investing in public markets. Sometime in 2011, I moved over to private markets with Deutsche Bank and has been investing in private credit since then. I've been with Lighthouse Canton since 2018, overlooking the asset management business. And at Lighthouse Canton, one of the strategies that we run on the private investment side is our venture debt strategy. As part of the strategy, we essentially lend to companies which are mid-stage, tech-enabled companies, typically Series B, Series C kind of companies who have viable business models, who are on path to profitability, and who have the ability to emerge as segment leaders within the sectors that they operate in. Our venture debt strategy focuses on the Indian startup ecosystem as well as the Southeast Asian regional startup ecosystem. And this is a recently launched investment strategy. And we have been running it for a couple of quarters now successfully. So Samantha, let me just take a pause here and hand it over back to you.
Sure. So it sounds like both of you are very well versed in the private markets across India. And, over the past decade, we've seen PE/VC investments grow tremendously. Now, according to EY report, 2011 to 2020 saw a compounded annual growth rate of about 19%. So in both of your opinions, can this growth be sustained? What are your views on the long-term structural trend of India's VC market? And what are some of the catalysts and factors that are supporting this trend in your view?
In my opinion, we are at the tip of the iceberg. So the Indian startup ecosystem, in a sense, I would say the earliest funds came in the 2000s. And, it took a while for the ecosystem to build out, for people to get comfortable, for entrepreneurs also to start understanding how to deal with VCs, how to raise money, how to build businesses over time. And that's taken a while, right? Now, the COVID pandemic was a huge accelerator. The lockdowns that there were sort of catalyzed people's adoption of technology. And since then, we've seen sort of a massive increase in people sort of going online and completing, whether it's for shopping, business, other things, and really becoming more tech-enabled. And we're seeing that across the economy from top to bottom. So coupled with that has also been sort of an explosion in digital infrastructure in India. We have some of the cheapest sort of data rates in the world. A very good data network has been built out. So most of the country has good sort of internet access. And on top of that, there's also been a huge digitization of our financial ecosystem with things like UPI and everyone having sort of digitized access to their bank accounts. So a combination of all these factors has started to drive the growth of the tech industry, I'd say, in India. And as I said, we're still very, very early in our development path. India is still a relatively poor country. We have ways to go. The tech revolution is going to enable that. I think you're going to see sort of a multiplier effect in the number of new companies and interesting businesses that get created in this entire space. And over the next, I would say 15 to 20 years, I think we're going to see a lot of very, very exciting developments in the Indian sort of startup ecosystem.
I agree with most of what Sohil just spoke about. I believe that we are still in the early days of structural uptrend that the Indian startup ecosystem is witnessing as we speak. I would say the early startups, maybe 15, 20 years back, if you talk about the tech-enabled startups, the first unicorn, India got its first unicorn sometime around 2010, 2011. And by the end of 22, India had 100 plus unicorns. We believe that as far as internet penetration is concerned, there's still a long way to go. As we speak, India's digital penetration stands at circa 50 odd %, which means that, almost 750 million people in India have access to internet. And there's another 750 million people to go. India has got superb digital payment infrastructure. India does close to 7-8 billion transactions every month as far as digital payments are concerned by these 750 odd million people who have internet access, which means that every person is doing close to 10 transactions a month. And this number, 7 billion transaction taken together, is more than what US, UK, France, Germany does on a monthly basis. So what has happened is that with digital infrastructure, with solid digital payment networks, a large part of India's, tier 2, tier 3, tier 4 markets have gotten unlocked, which the young entrepreneurs are now able to access. Almost 65% of India's population lives beyond tier 1 cities, which are typically these cities with population less than, say, 500,000. And most of the digital commerce orders which are being recorded now are being recorded from cities which are beyond tier 1. And we believe that there's still a lot of unlocking to happen. Now, that's on the demand side. On the supply side, also, what has happened is that the societal acceptance as far as entrepreneurship is concerned in India has gone up considerably over the last decade or so. I mean, 15 years ago, 20 years ago, when some of us were coming out of colleges, there were very few people who were getting directly into entrepreneurship. But if you go to any top engineering school in India, or for that matter, any top university in India, a lot of people are looking at entrepreneurship as an opportunity right from the start of their careers. Now, that's happened because the society has started to accept entrepreneurship as means of living.
India is also churning a large number of skilled technical workforce on a yearly basis. India produces close to 1.5 million engineers a year, and that's a big number.
So all these factors taken together are catalyzing the boom of the startup economy in India. And I believe that this trend is there to remain, and it's going to be there over the next decade, as they say, belongs to India. And I believe that the startup ecosystem is going to emerge as a winner. Right now, there are global macro headwinds, which is kind of, causing some kind of volatility as far as this ecosystem is concerned. But we believe that the structural uptrend remains intact.
Yes, indeed. I can see that you're both quite bullish on India's private markets. And Sanket, you did allude to some headwinds that we might be facing. So 2022 was the year of market corrections. And, this quarter, we've had a lot of funding slowdowns and fundraising issues. So are you concerned about the downturn, and you guys making any changes to your portfolio approach?
So Samantha, look, I think our investing philosophy doesn't really change no matter, what kind of market you're in. At the end of the day, we look at investing in good companies who are on path to profitability, companies who we believe can emerge as leaders in their segments. And that remains true across different business cycles. What is happening right now with corrections in the market is that the deal flows have become much stronger, because a lot of deals which were being printed, say, 12 to 18 months ago are not happening anymore. The check sizes have become much smaller, if at all. Therefore, the deal flows, particularly on the venture debt side, has increased substantially. And we are getting a lot of high quality companies who are looking at debt capital. Given at these valuation levels where there has been a correction, they are not very keen to dilute. And that's true for most founders who are running good quality companies. So our rejection rate has gone up, which means that, out of every 100 transactions that we are looking at, we are rejecting more number of transactions than what we were doing, 6 to 9 months ago. So that is something which has changed, but the investment philosophy remains the same.
Yeah, I would agree with what Sanket is saying. Though we invest slightly differently in the equity of businesses, in equity rather than venture debt, sort of the market dynamics are pretty similar. Good companies are continuing to raise money. But having said that, of course, there is a slowdown. Deals are taking longer to happen. Valuation expectations are moderating downwards. But funds are still well capitalized. People do have money to invest. So I see this as a little bit transient. I think there will always be appetite and demand for good companies. Now, what constitutes a good company, that definition is also changing a little bit. In the past, the focus was very much on growth, grow at any cost. And now I think I believe a more holistic evaluation of businesses, which I don't think is bad, where investors certainly want growth, but at the same time, they also want to see a path to profitability.
Sure. And you both mentioned earlier on, that the funds that you look at focus on early stage and growth startups. So can you tell us more about the investment sectors and the types of companies that looked attractive to you right now? You talked about investing in good companies. And when you look at investing against the current backdrop and choosing these types of companies and founders to work with, what has been your approach?
So, look, from our perspective, our approach hasn't changed very much from when we started the fund. And we did start investing when the environment was already difficult. But just philosophically, we've always believed number one in backing good entrepreneurs. And by good entrepreneurs, I mean people who have solid educational backgrounds, who have good work experience, who are organized, who have clarity of thought and vision. And I think that should be true in any market. The entrepreneur and the founders that you're backing are the most important part of a business, especially when you come in at the really early stage, because these businesses do go through multiple pivots. So it's founder first. Secondly, we want to. So our philosophy is go early, but not too early. And by that, what we mean is we want businesses which have validated sort of unit models whether if there's a product that's being sold, the product is actually being sold, there's some uptake, we're able to track sort of whether users like the product, what are the repeat rates, etc. Right? If it's a service, the same thing. And number three, we want to see really, really solid unit economics and a path to profitability. What in this funding environment, we are pushing all our investee companies to get to cash flow break even with the money they already have in their accounts, or at the most with very small additional fundraisers. I think that's something that's really important in this environment. I mean, obviously, aside from this, there are multiple other things we look at, but these are, I would say, the most critical.
Yes, I agree with Sohil. There's a slight difference in our approach because by the time we go into a company with our venture debt offering, these companies have reached mid stage. I mean, these are not growth stage companies, but between early stage and growth stage, and they have a proven product market fit. So the business model becomes extremely important. Unit economics becomes extremely important. We like companies which are already breaking even, at least at unit level, if not at corporate level. In fact, as we speak, almost 50% of our companies are profitable at EBITDA level, corporate EBITDA level, 50% of the companies that we have in our portfolio. Therefore, proven business model, that's something which is important. Good unit economics is important. Founders, needless to mention, it's extremely important to have good founders with strong execution capabilities and the ability to navigate through tough markets. Tough markets can come at any point in time. I mean, COVID was a classic example. Therefore, it's important that founders have the resilience to see through bad days. And lastly, when we talk to our founders, it's very important for us to have a conversation wherein we tell them that, look, if all the money that you have is taken off the table, would you be able to run your company profitably or not if you don't have a growth mandate? If the founders believe that they can do that, and if we believe that the founders can make that happen, that's the right kind of company for us to invest. And these kind of companies, we find across multiple sectors in India, whether it's, health tech, whether it's supply chain focused businesses, certain fintech lenders. So we are investing across multiple sectors, but these are the core things that we look into a company or the founder/founding team before making our investment decision.
That's really interesting to hear. So, I mean, the current environment hasn't been, entirely conducive. We're obviously at a point where funding is slowing down, and the road ahead doesn't look particularly bright. What would be your advice to portfolio companies as far as business growth, funding, and other operational aspects are concerned?
So look, I think it's spoken about it a lot, in this conversation. And in times like these, it's very important for companies to start focusing on profitability. Even though they may have to compromise on the growth mandates a bit, it's fine. But profitability, mindset is extremely important. We are asking all our companies to reduce cost. If the companies are not already profitable, it's very important for them to increase their runways. And that's not a discussion that only we are having. It's a discussion which is being done across multiple boardrooms, whether LC Venture Debt Fund is there or not. So increasing your runway, managing your working capital better, these are some of the things that we are speaking about. And as I said some time back, one of the conversations that we are having with our founders is that, if you don't have to grow, can you turn your company profitable if you're not already profitable? And what do you need to get there? We are asking all our companies to come up with a plan to get to profitability if they don't have to grow. So these are the kind of discussions that we are having with our portfolio companies as we speak.
Yeah, that obviously resonates for us too. The main conversation we're having with our portfolio is to just reduce cost. So we're doing a line item exercise and seeing where it's possible to cut. And these companies often have a lot of slabs, so there are spaces to cut and get to break even. We are focused on working capital optimization, and essentially we want to get companies to break even with the capital they have in the bank. If growth comes down as a result, that's okay in this market. We think growth is secondary to profitability.
That was kind of in the shorter term, midterm. And if we go back to the longer term picture for the private markets industry, this is going to be our final question for both of you. What would you say is one investment trend you see picking up across the private markets or the startup ecosystem next, say, 3 to 5 years?
A lot is being talked about, chat, GPT, AI, etc. And I believe that, India is catching up to the whole AI trend. I'm really looking forward to, path-breaking innovation coming out of India as far as application of artificial intelligence, across different sectors is concerned. AI has multiple applications. It could range from innovation, it could to servicing, to providing solutions, etc. And when it comes to a country like India, which I believe is the right kind of market for AI-driven solutions, given the huge population that India has, and the fact that, cost of servicing an incremental client can increase disproportionately as a percentage of revenue. Therefore, it's time that, AI-driven solutions come up. And I believe that AI-driven solutions would be the key to reach out to such incremental clients who are part of tier 3, tier 4 rural economy in India. And therefore, we expect that the whole AI-backed industry would grow more popular over the next decade. So if you ask me about the long-term trend, I believe that, we expect some path-breaking AI-led innovation happening in India or coming out of India.
Yeah, I think Sanket's picked a good theme. AI is definitely going to drive a bunch of innovation in India and what we see. But India, just across the board, there's so much to be built. As I said earlier, we are a poor country. There's just innovation happening across the scale, and it's not always obvious where this innovation comes from. So, for example, on the payment side and on the whole fintech ecosystem, the government did a phenomenal job just getting UPI, sort of unified payments underway, which enable basically peer-to-peer transfers. And that's led to a spate of innovation in fintech. I mean, if you look at our portfolio, that's been sort of the number one area we invested in, because we just see very, very interesting businesses coming out in this sector. And many of these businesses can only be built in India, given the financial infrastructure that we have. We've seen a number of sort of space-oriented startups come out in India, and we think that's something that's going to see resilience and further development. Agri as a sector is one where there's a massive amount of disruption waiting to happen. So again, on a 5 to 10 year view, I think the entire agri industry in India is going to be transformed by innovation and what these startups do. And of course, it will marry a lot of these themes. There'll be an AI component to it. There'll be Internet of Things. There'll be all kinds of. There'll be a fintech angle. So, but all those new emerging technologies will just combine together to disrupt entire industries. And we're really excited to see that happen over the next few years.
Yes, indeed. I think, the future looks quite interesting, quite bright. We're looking at a lot of digital trends moving, the market forward. So thank you, both Sohil and Sanket, for sharing your insights today with us on the private markets, the sort of structural trends, the catalysts and factors, and how you approach investments in the private market sector in India. Thank you again for joining us and taking the time to share your insights with us, Sanket, Sohil.
Thanks so much. It was great speaking with you. Thank you for having us.
Thank you once again for having us. Pleasure speaking to you guys.
Thank you for tuning in to the Lighthouse Canton Insights podcast. We hope you have found these conversations insightful. To hear more conversations from more experts, please do subscribe to the Lighthouse Canton's Insights podcast. You can also stay up to date with Lighthouse Canton's latest news and insights by visiting our website at www.lighthouse-canton.com or social media pages. We look forward to having you again in the next episode. This podcast has been prepared by Lighthouse Canton Private Limited and or its affiliates. For informational purposes only, there is nothing contained in this podcast that constitutes advisory services. This podcast shall in no event constitute or be considered as advice to invest in any specific investment or investment class, vehicle, or in financial instrument. The information contained in this podcast shall not be considered as legal, tax, financial, or other advice. You should consult a professional to obtain specific advice regarding financial, legal, regulatory, tax, and other regulations applicable to you. You should consult a financial advisor authorized in your jurisdiction before making any investment decision to ensure that you fully understand the products and potential risks involved. Please visit www.lighthouse-canton.com/podcast for more details.